We're live. Go. And welcome out to the Tactical Trading Halftime Report. It is Fun Day Friday, and I said that just for Mark, who is here with us today, and I believe he's in a joyous mood, right, Mark? How are you doing this morning?
Listen, that freaking cron put that Tim told me to sell is in trouble, and so.
Oh no, yeah, I exited Cron. Cron broke its 200-day moving average.
Tim told you to sell. What else did Tim tell you to do?
Tim tells me to do a lot of things that I should not do. But listen, I'm a big boy. Listen, I've been really anxious to get put stock that I don't want so I can practice some of my trade management defense techniques. Because I'm usually so conservative in puts I sell, and they expire, and I don't get to refine my skills. But I'm going to get to refine some skills on Cron, I think.
Well, that chart's going to pot. Had to do it. And hey, trade management's always a valuable skill to practice.
Trade management is literally amazing. Trade management is what separates like a huge percentage of your overall wins and losses at the end of the year. Trade management's amazing.
Oh, absolutely. What's your favorite naked put trade management, Mark?
Oh, I like going, once I get put a stock, I always am looking to acquire more, but my first defensive move is usually an in-the-money call, calculating what my break even, how much I'm making, all that, but usually going out a little bit in time, selling an in-the-money call to protect that initial investment where I can still cash flow on it. And if it continues to go down, when bearish signals are produced, which, the whole marijuana industry broke down today, which is
no longer high.
Too easy. I like that. So
it's no longer high,
Yeah. So selling the call on the naked put turns it into a short strangle.
So, it's after I'm put the stock.
Oh, after you own it. So actually, I'll do it before I'm put. I'll sell if it starts breaking down and I've got puts that are drawing down, I'll sell the in the money call, and you calculate the difference between the strike prices and the premium received. And if you collect enough money between the strike prices, you don't necessarily take a drawdown.
No, I know. Trade management techniques are amazing. That you can be wrong and still make money, and that's power.
That is power. I think trade management is where it is at. All right. Well, broad market's pretty quiet this morning. We're at all-time highs, and we're just trading off that all-time high. I watched it creep up overnight to the 3,012 ballpark, and I was wondering if we were going to get a little bit more energy in the market today, but it's just drifting higher. And like Mark said yesterday, there ain't nothing wrong with the slow drifting trend. That's not a problem at all.
No, because something's always breaking down. In slow drifting trends, you can get a lot of action in different areas because not everything is drifting up. Some things are going down. Some things are having really nice days. Home builders are having a really nice day today. So, you can find industries and groups in a drifting market that are really, really performing well. Costco, which I highlighted on Twitter, up another % today. So Costco has been on fire. Option report pick. Been on absolute fire. If you saw that breakout at the bell yesterday, which I highlighted on Trading Justice Twitter, up again. So there are stocks, there are situations that can be really, really profitable in a drifting market. And that's what I love about it. When you have a hot market, everything's going up. And so trading can be easy. And there's nothing wrong with that, obviously. But boy, I don't mind a drifting market at all. It really, really becomes a little bit of a stock picker's market, finding those great opportunities. What was it? PHM, home builder PHM, broke out of resistance today.
Nice break there. Yeah. Well, I had the XHB set up for breakout. So you got the home builders breaking out, PHM breaking out. Looks good. That's a good looking chart.
That's a good looking chart. So there are opportunities, and home builders have been really nice for cash flow. And I talked about this on Trading Justice Twitter, and that is the second of about 47 shameless plugs on Trading Justice Twitter that I'm going to give this morning. But, talked about this breakout on PHM. Home builders have been a great cash flow going back for a couple months, really resilient to sell-offs, pretty decent overall macro environment. You have lowering rates. The analysis of this is really simple, but that doesn't mean it's not true. Lowering rates, all other things being equal, generally a net positive for home builders, because when do individuals look to buy homes? As a general rule, when rates are a little bit lower.
Low, yeah.
It's very simple analysis, but doesn't mean it's not true. And that can serve as a positive, if nothing else. Even if home builders don't take off through the roof, that sentiment can provide a nice little stable floor for home builders. Really like home builders right now for cash flow situations. And there might even be a little bit of price appreciation, as you see on the breakout of Pulte here.
Well, it's a bit of a no-brainer with the rate cuts coming up probably at the end of the month here. And I think that the fact that all those stocks in the sector broke out, and I know that like Home Depot and Lowe's track the home builders as well, and Home Depot broke out as well. Big break, and I've been regaling everybody else with the story.
I believe somebody's been talking about this break for days now.
And you want to hear the worst part, Mark? I missed it. But hold on, there's a reason for it. I had my order placed yesterday at the close, and I didn't get filled, so I had it placed again today for the open. And I had a Home Depot delivery guy delivering a whole bunch of stone and lumber and stuff that showed up right at the market open. So I had to run out and help the guy, and I missed Home Depot trade because I was out.
Home Depot was delivering.
Home Depot is delivering lumber to my house and getting the forklift out, and
missed on the Home Depot trade.
I missed on the Home Depot trade because it ran so hard in the first 15 minutes. 30 minutes. I just missed it and I didn't get filled, and so now I'm like, well, do I chase it? No. I could have paid for the whole dang treehouse I'm building for my kid, but no.
And look at that great stability. I love it when intraday sell-offs, because intraday sell-offs can happen for little pockets, 15, 30, 45 minutes at a time. But look at that really strong intraday support level that formed immediately. Sells off a little bit of profit taking, and immediately forms a short-term support level, bouncing off that. You've been all over that the last couple of days. It was a great call. Hopefully some individuals were able to take advantage of it. But if you're, think about this. I want everyone out there that's watching this, either if you're watching it live or watching it via, sometime this weekend or tonight.
Stock block.
There is any chance that rates go up this year?
Sorry, I just missed James's great commentary in there. I got stock blocked.
Oh, that's funny.
Now that is a fun Friday.
All right, that is a Friday
right there.
Mark, what would you put that on the yard line? Because I think that's like a 10. That's a good joke.
That is. I'm going to put that on the 10-yard line. I really enjoy. Okay, listen. I rarely laugh. Actually, Noah makes me laugh quite a bit out loud. I rarely laugh out loud, but internally, Jimbo, I really, really appreciated that joke. I enjoyed that quite a bit. But you think about this for the rest of the year. Do you think that there is any chance that rates go up this year?
Nope.
Answer that for yourself. I think it's almost to the point where it's a rhetorical question that there's not any chance. So think about home builders for a second. You're going to have a positive interest rate environment that sends mortgage rates down. Now, can home builders go down and depreciate in price? Yeah, but that's probably going to mean the whole market's going down and depreciating in price. So home builders have a really positive sentimental backdrop for cash flow investments for the rest of the year. and probably into 2020. Now if the whole market crashes, if the whole economy crashes, well, obviously all bets are off. But we have to make decisions based on the information we have today. So if you're generally bullish on the market, home builders provide a nice little price, because you still have a lot of upward price appreciation. Go pull up a home builder chart again. Look at the clear air to the upside on home builders.
Are we at all-time highs here? Nope, not quite.
A little bit further in time, like, you still have some price appreciation. So I really like cash flow environments where I feel like there's a stable floor for cash flow in the next 6 months, with the chance of a little price appreciation. Because while price appreciation isn't the primary goal when I cash flow, hey, who complains? Who complains about that? So you got some clear air to the upside, stable backdrop. The only real negative, the whole economy crashes, and then anything you're long is going to be in trouble.
That's true. That is true. I don't know if that's, this is one of those things that every time I see the market hitting all-time highs, I do start wondering about those valuations and what's coming down the pipeline. But I'd say don't fight the Fed at this point in time. I mean, it's one of those things where the rumors of the rate cuts, I think, got us to where we are. The actual, more realistic realization that the rate cuts are more likely. The market didn't respond too much, but they're still coming out there. So
I'm not going to fight the Fed. I'm going to stand back and call them an idiot, though.
Oh yeah, I'm going to absolutely undermine them and doubt everything they do, but don't fight them. You just yell insults from a distance.
Exactly. Playground bullies coming around. You're like, oh, I did that guy. I mean, if he came over here, I would. No, I'm okay.
That's too funny. Sweet. So we got the E-mini S&P. I have not taking a look at the NASDAQ this morning. It's got a little bit of life behind it today. Again, just up there testing that all-time high. It's not quite there yet, but it's pretty darn close. The YM Dow actually got quite a bit of energy on the Dow, seeing a little bit of a movement there, because I know Home Depot is a big component of the Dow. But isn't J&J also a component of the Dow?
I don't know.
It used to be. I don't know if it still is. Let's double check.
Let's see.
Dow 30.
I'm just going to go quickly to the Market Watch. It is part of the Dow, and it is the most read part of the Dow right now.
It's down. Look at that dropping like a rock. Headwave earnings, and that you said again was caused by.
So it's long been known. There's been studies. All right, Cody's diving into his toxicology here, so public disclaimer: if you don't care, then just tune me out. All right, so J&J is being lawsuits being open as to whether they withheld information on the associations between talcum powder, which is their baby powder, and various forms of cancer, whether it be ovarian cancer or mesothelioma, because of the asbestos in the talcum powder. That drop that we saw back in December was actually the news that came out that in the 80s they had asbestos in the baby powder. So that was known. Now, the association between talcum powder and ovarian cancer is not a new one. As a matter of fact, J&J has been sued multiple times, and I went ahead and looked up how many times they've been sued over this. And here are the lawsuits that have come out. They've lost or settled. Talcum powder lawsuit, they lost $417 million. Next one, $72 million. Next one, $55 million. Next one, $70 million. Then another $500 million. So this isn't the first time this has come up. The only reason it's new news now is that they're now looking into the criminal prosecution of whether or not J&J had more knowledge that they did not disclose to clients, to the public, as to these associations. Now, talcum powder is very interesting, and the reason it can even cause cancer is because it's actually a mineral. So when it does get into the body, your body can't break it down. So it instead causes inflation, and there are several hallmarks of cancer that lead to cancer, one of which is inflation. When you're getting high rates of blood and pressure in certain areas, then when you get those mutations and those resistance to cell breakdown, and I'm not going to go into all the hallmarks of cancer, but basically it greatly increases your risk of developing cancer because of the inflammation itself. which is
For a
also
minute there,
why.
I thought you were saying inflation, and I'm pretty sure you did say inflation.
Oh, inflammation.
Inflammation, inflammation,
Blood.
inflation. Either
Yeah.
way, it's a pain in the backside.
Oh, yeah, it's terrible. Which, yeah, inflammation, easy way to solve that. Take a baby bear aspirin
So the
in the morning.
criminal investigation, I know back when it gapped in May.
Was that May?
That
Okay, I
was
thought it
like,
was
there was like
December.
email. Well, you had back in May, they had the email leak that somebody had found emails back and forth from back then that, proved they had some sort of knowledge on it. So I think that's where the criminal investigation comes from. It's just a rehash of what happened back in May. So interesting chart. Price moved down, pretty heavily. Volume way up.
The way that I honestly see this, and this is just trading, is that if this thing starts to stabilize again, I'm going to look to buy, because this isn't something that Johnson & Johnson hasn't dealt with before. As a matter of, like I just read off multiple times they've been sued over this exact same issue. So it being top headline, I think, is also just because there's nothing else for the news to really talk about right now. So they're really blowing this up. I actually think that if we get 2 or 3 days on Monday through Wednesday to just stabilize, I'd be looking to pick up some shares just because I think it's overblown.
Well, I mean, here's a great 1-2 scenario. With all sensitivity to those individuals who might have been affected by a corporate action that caused them real harm in real life, but we have to analyze it from a charting perspective. So we have Johnson, because I generally agree with what Cody just said. When you have news events that are negative, that are these big headline events, most of the time this creates a nice entry buying opportunity at some point down the road. I mean, think of BP with the big oil spill. One of the biggest headline news events you could have. I mean, go back to a monthly chart or something really long. I mean, BP got just hammered, just absolutely obliterated in the press, obliterated in the headlines, but created a nice short-term buying opportunity, which led to a nice longer-term buying opportunity when BP got drove down into the high 20s. I remember that very well. I mean, it was just getting obliterated in the press. But when we're trading, when we're investing, now, if you have moral qualms, hey, I get it.
It was back there in 2010, and that was quite a drop.
If you don't have moral qualms, I get that too.
Yeah, I mean, I try to approach this from a chart's a chart, and opportunity's an opportunity. Sometimes that can be cold. Sometimes that rubs people the wrong way. But, at the end of the day, my job is to provide for my family, in the long-term future. And so while I am sure that there are certain examples where I'd be like, I just can't support that on a moral standpoint, like one of the best examples I ever heard, and I can't remember who it was. It was a legacy trader. I remember them talking about 9/11. And obviously there was a great shorting opportunity following 9/11. But I remember him detailing and going through, like, he refused to short the market following that. Like, it just was against his moral parameters. And I totally get that.
Well,
but go ahead.
I had a friend of mine that was trading the descending triangle before the 9/11 hit. So there was a good, reasonable technical setup in advance of the event. And then when it hit, boom, he actually did make a whole bunch of money.
There was
and he ended up donating the vast majority of it to the survivor funds, et cetera, et cetera. But
there was I've read so many books, so I can't remember who it was, but there was a large hedge fund manager who witnessed the first plane go into the tower with his own eyes and immediately started shorting the futures market out of Chicago and made multi-millions, and he donated it all. So he witnessed that event happening and he used it to actually help fund the recovery of that event, which I thought was really neat.
Well, and that devastated a lot of traders too. I mean, it caught people unawares, obviously, and the bad news happens. And back to BP, for example, the fact that the stock stabilized, pays a dividend.
It might have been trading the zone 6. It might have been.
You know what BP stands for, right? Broken pipe. There you go. But no, that's a interesting recovery, and then as of late, it's been pretty stable. So, oil did not break out for us yet, though, Mark.
No, I mean, negative headlines. I mean, go back. I mean, I remember McDonald's. McDonald's back 15, 20 years ago. I can't remember exact what the year was, but there were negative headlines about dirty restaurants where, like, you know, I mean, they were just
Like
all
Chipotle?
over. Like, I mean, it was back in 01, 02, 03, but dirty restaurants and McDonald's were filthy. Kind of reminds me of Chipotle. Over the last couple of years, where there were a lot of negative headlines. You know, these negative headlines that capture the attention of the market can really pound a stock down. But this is where value investors, and this is where bottom feeders like myself look at opportunities, that headlines that, like, you know, ask yourself, is this really a catastrophic long-term problem that is going to derail the company? Most of the time, the answer to that question with these big companies is
No.
And the overreaction, there tends to be I mean, this is true for good news too. Overreaction is most common outcome. And so there's a really high probability of a revision to the mean. And so I personally, like, a lot of times you'll miss the news event itself, but you can catch the revision to the mean if you're watching closely. Like, you get something like that, like J&J with negative news. And I bet you if I called up Gino right now and I asked him what his thoughts were on it, he'd be like, yeah, I already sold naked puts with a delta of 5. Like, he's already down there out of the money selling naked puts because the stock price got beat up. And I'm assuming that because I've seen it every
on this thing is through the roof.
Every time something gets really hit hard, volatility spikes up, puts get inflated, and then those way out of the money puts. Like, you could say, you know what, with this drop, how do you feel about selling like a 120 put out of the money? And you go out to, whatever your 30 days, 40 days, whatever your number is, and you can go find those 120 puts and see what kind of premium they got. And like, I wouldn't even mind going out to September and saying, I'll make that promise right now to sell the 120 put for $1.23 and just sit on it and make my 10% return. Because what are the odds of it going all the way down below 120?
I mean, I can go get $8-9 right now at 129 on a Johnson & Johnson put today that expires today. That's the type of volatility spike that Noah's talking about.
To make things a little bit more fun is we have earnings next Tuesday.
No, and that's the thing, and before we start talking about other things, that was the 1-2 punch I was talking about. Is so you have this negative news event, you have earnings. Let's say for whatever reason earnings are off a little bit. I mean, you could see a real huge slide in a couple days. Now, some traders, momentum traders, day traders will obviously short it, take advantage of that to the downside. But more position traders, long-term investment, they look at these negative news headlines. They evaluate them. They decide, is there any long-term stability problems that this creates? I mean, one thing that scares me always are accounting problems. When a negative news line is something about accounting irregularities, I usually back off and don't mess with that. But just about almost anything else, I'm really excited from a trading standpoint about negative news headlines because they almost always create really good position trade, cash flow trade opportunities. So I would like a little bit negative earnings report, get a real slide. We got a pretty good floor at around 120. The 200 weeklies at about 124. So there's some support areas there that could stabilize the stock. Obviously, wait for that reverse signal, all of that good stuff. Don't catch a falling knife. But negative news headlines is a real moneymaker as a general rule in trading. And so don't be the person that's getting sucked up in the headlines. Be the contrarian who's looking, all right, how do I make money on this? Maybe not today, but a week from now, 2 weeks from now, 3 weeks from now.
I'm currently analyzing a inverted butterfly right now through earnings. I'm very curious on this. This has my attention.
Captures your attention, gives you something to work on.
Listen, you youngsters can take your sold puts on Cron and your inverted butterflies, and you can go have a good old party this weekend with them. Give me some nice value stocks that form support levels that I can buy. There's nothing but clear air to the downside on my Cron.
See, but that's a great That's a great example right there for Johnson & Johnson, is that I could make the argument this is a good fundamental company that you could buy long term. And so that's the way that you're looking at it as a fundamental trader. I'm looking at it as, hey, could I make a quick buck off this thing through earnings?
And I mean, and we were seeing sell off in a lot of pharmaceutical companies that are getting drugged down.
Check out Merck dropping down hard towards that 200 period moving average. I don't know if there's news behind this. I saw this break yesterday and I didn't bother to go look at the headlines. I just thought, oh, that's interesting. Maybe it'll give an opportunity to buy. But, coming down hard, on an increase in volume, rising 200 period moving average, big support zones, back that out to a weekly and traders will look at this as a probable pullback. Again, want to go make sure you understand what the news is behind that little break. Earnings is a ways out. I love it anytime, again, big, well-established companies do get beat down a bit because it does create buying opportunities especially for the investor class and the longer-term position holders.
I mean, Pfizer's the same thing. I tweeted about Pfizer on Trading Justice Twitter this morning about Pfizer. I like Pfizer. Nice. I like Pfizer as a cash flow stock. Pays a dividend above 3%. A yield that would actually go up if the stock goes down. Pfizer will trade sideways with the best of them. I mean, we just look at this right now. I mean, what's Pfizer been doing for the last year?
Sideways. Awesome boomerang trade candidate.
And so, yeah, I'm really excited about a little bit of sell-off. I will acquire shares of Pfizer if it comes down to 39 and give me a little bit of stabilization.
Fantastic.
So, down days are great, unless you own
the stock, and of course,
unless you own the stock. Then you're like, eh.
Well, and there's always, like the PG and E's out there that get what is it, PCG? No, PG and E, yeah. They
PCG was the wildfires in California.
Right, and even that, I mean, initially it took a while, but it started to recover a bit, and they still have, I think, quite a bit of fiscal liability there, but at the same point in time, down at $5, there's certainly going to be the savvy investors out there who realize that may or may not be the death knell for them, and boom, nice recovery. If you take an action down there, you're up 300% on the stock alone, if not more. So not too shabby. Not too shabby at all. What other pharmaceutical companies got hit? We got Merck, we got Pfizer. Any others taking?
I haven't looked at Bristol Myers, but put in BMY.
Bristol Myers.
I mean, we're probably having a general sell-off across the board the last couple of days, and we certainly are. Now, and I believe the news that got hit on it, there was something to do with the White House rolling back, canceling their plans, with something to do with, like, I want to say Medicare benefits. I don't remember the exact headline. But it impacted to the bullish side. Cigna, CI, got a nice little spike. It was huge. It was huge for Cigna.
Oh, I think it was discounts on drugs.
I mean, there was something.
And the same thing. Humana is the same. Look at HUM, same thing.
Yeah. So the discount providers, they're basically getting discount pricing. So it hurt the pharmaceuticals, but it helped the insurance providers.
No, and I like the long-term catalyst on Cigna. I mean, this is like, listen, it's providing nice opportunity long-term. Listen, those pharmaceutical companies will always be fine. Those things are cash cows. Buying them at discounted rates has been and probably will be from now to the end of the time a great buying opportunity. But for Cigna, for Humana, for United, I mean, this was a huge catalyst, huge catalyst that could provide some really nice entry zones, some really nice stability. It's just, how do you want to play it?
That's an interesting inverse correlation on those.
It most certainly is. Let's do some rapid fire.
Well, let's do some rapid fire. All right. So here they come. Frank. Good to see you here, Frank. UNH busted through 2 levels of resistance and it's still running. It sounds like Frank's like all up on UNH still.
Listen, right. Frank, I talk about the Trading Justice Twitter account. I have made money following Frank on Tackle Trading Twitter. Listen, I am the person on the planet that doesn't like Twitter maybe more than any. If you don't like Twitter, guess what? I like it less. but it is a nice vehicle to communicate with our members, with those individuals that are part of the tackle trading family, what we're seeing on a daily basis. Little snits here and there. I have made money following Frank on Twitter. Even though I hate Twitter, I like money more.
Hey, Ilka's made me money on Twitter.
Like, I mean, so, I hate Twitter. I hate social media. I just want to live in my hole, but I like money more than my own recluse nature.
All right. So, here they're trickling in. So we're going to start running through these. Emily was asking about Lulu. I like the breakout setup on Lulu.
It's pretty.
That's a nice looking setup. That's awfully pretty. Nothing to argue with on that.
You said watching Lulu rip without you. I don't think it's too late to get that above the high right there as a breakout.
You want to see Lulu rip? Let me try on some of their apparel. I will tear it.
There's Emily, a nice Canadian member of our tackle trading family, promoting a Canadian stock. I just think it's a north of the border conspiracy going on here.
I'll take it.
Those Canadians, they think they're nice and they want to give that perception, but they're really just sneaky, trying to prop
And when you're not looking, they're going to give you free health care. And pay you compliments.
You take this, enjoy it, and you have a nice day.
Yeah, it's a pretty setup.
Very pretty setup. What's next on the list there?
Let me scroll.
WJ Netflix or EOG? EOG consolidating.
Neutral wedge pattern.
Yep.
It needs to pick a direction.
I'd take that as a volatility play, perhaps.
Next is Netflix. Netflix is still neutral. I look at that thing every day.
Netflix is a piece of crap company with
still neutral.
Extremely negative cash flow, with increasing competition.
You're just mad that they canceled The Office.
I am so livid that they canceled The Office, or not canceled, that NBC pulled. That was my go-to show on Netflix. That was Netflix's entire reasons of being. But, hey, listen, when you approach resistance is resistance for a reason. And that was a really strong resistance level. Not a surprise that it's having a little sell-off. But there's some fundamental problems with this company. I'm really turning bearish on it.
Earnings is close. It's on the 17th. You don't have a ton of time. Could be a volatility play. This is the kind of stock when it's sideways like this and the implied volatility is nice and high. It's not quite there yet, but I do short strangles on stuff like that. I'll sell the out of the money options out above resistance and support. Next on the list is WJN. Nope, that's not a symbol.
It's a beautiful chart.
Was it? WJN. Did we get it? Nope, nothing coming up.
I don't see WJN.
There it is, Jared. JWN. But just lexicon.
Oh, Nordstrom?
Yeah, I got you.
So I've said it a couple times in the scouting report meetings as we keep putting this on here. And I don't know who it was. I don't remember. But about 3 weeks ago on Twitter, someone said, it's hit a bottom. Everyone needs to start buying right now. And I tweeted back and I said, I wouldn't be so sure if it breaks 30 and the next support level is 20. And it popped up the next day. I think it was right there where your cursor is. He then tweeted back at me and said, look, it's up today. And then it's been doing this. So I've been waiting for this break just so I can.
You want to have a Twitter, haha, I told you so moment.
I do. I want a scoreboard moment.
Twitter come up
scoreboard.
There you go.
But yeah, wait for it to really break. It looked like it was going to. I might have snookered a few people in down there at 30. I think, or 30.14. The real break is below 30.
Big fat number. That'd be a clean break. Next on the list.
Actually, back out because look where next support is. It really is at 20. There's nothing
from a support level.
If it breaks 30, it's going to 20.
Well, I don't know about that, but it is a nice bearish signal. Maybe
not initially, but I mean, look at all retail. It's all just.
I assure you, if it hits 20, Cody will recall that very easily, and he'll come back and let you
know. Mark will hear about it.
Sure. There you go, on Twitter. I told you so. Okay, what's next on the list? I like it. It's a good setup.
Next on the list is going to be WRK.
pretty neutral on this one. My take. What, anybody else have any insight on that one?
I want to add a package company, like these packaging companies. They're boring companies, so of course I like them. And so I don't know about the fundamentals of WestRock as a whole, but yeah, I mean, Noah's pretty neutral. I don't know if there's a lot of excitement one way or another here.
I'll tell you that the most exciting thing about this company is the 45-cent dividend.
I know that's, and once again, shock. Mark likes a nice, boring packaging company with a reasonable dividend. I mean, stop the presses, but that's true. I mean, that's a nice little return. Little return.
Great for the boomerang, I'm sure. Next on the list, BSX. Went down today. Looks like my stop's about to get hit. Had a nice little pullback setup, confirmation a couple days up, giving it up today, hitting the 20. This is why I put my stop losses below moving averages, by the way. Because that 20 period moving average may end up being what saves my bacon on that trade. See how that one works
What
out?
is healthcare doing as a whole right now? Because pharmaceuticals are getting dragged down. Is it dragging down everything with it?
XLV's down a bit. The XPH is down a little bit more. I looked at the Dow Jones Pharmaceutical Index, DJUS or is it not PH? It's DJUS PR. It's getting beat down pretty big. So
I mean, because what you have happen is that, you have a sector, but a sector is made up of a whole bunch of different industries within the sector. So you got pharmaceutical companies like Merck and Johnson & Johnson and Pfizer, but then you have medical device companies, like go back to BSX, that, pretty much have completely different, I mean, they're both healthcare companies in the sense that they're in the sector, but they usually don't have the same sentiment and news headlines and things pulling on it. What can happen, though, is that when an industry group is really getting hammered, like pharmaceuticals are today, it can drag the whole sector down. And, well, because of the amount of ETFs and everything that are tied together, Boston Scientific, which, been a nice little cash flow, nice little stock, nice price appreciation, getting drugged down with it today. Now, usually this can provide a nice entry opportunity later on. It doesn't help your trade today, though, does it, Noah?
No, it does not. And I'm not feeling too bad about it, though. Next on the list here, we had Kroger. Looks like it's finding a touch of a bottom on that. It's got that falling 20 period moving average and support zone in there. Back it out on a weekly. I think it's still got some room to drop.
Boy, but you got another support level right underneath it.
Yep. I'd wait for it to take out the low before it's probably only drops to 20, but that's a decent return that's 5% return on a $21 stock.
I think Kroger has like 4,000 grocery stores.
Well, and yeah, they're quite the chain and probably have products in the grocery store near you, definitely in the Western United States. Next on the list is Disney. It's breaking out. Well, first of all, I saw a Twitter brawl in Toontown at Disney where somebody's, caught some folks fighting down in the Toontown at Disneyland. I thought it was supposed to be the happiest place on earth. But nice breakout. New highs. I liked owning it. Got the good dividend. I don't have any problems with Disney. What do you guys think on that?
I wouldn't short it.
Was the first thing I ever bought. Just one share. I was like, you know what? I know Disney, and I got it back at 115, and I was so proud of it. Just one share.
See, Disney for me, Frank, who runs Tackle Trading Twitter, that you'll always remember, many years ago, like 3-4 years ago, 5 years ago. So maybe not many, but several years back, Frank's like, oh my gosh, Mark, you got to see this. And it was one of the most beautiful triple tops spread over 15 years that I'd ever seen. And so, Frank's always loved breakouts. And this is when Disney was trading at $44 or $42 or something. So Disney will always be a triple top. Frank's in, you got to play that breakout, and I did. And Frank was right.
You want an intraday short? Go back to Johnson & Johnson right now for our day traders out there.
That there bear retrace, that looks fantastic.
That looks like it's bouncing off the 9-15-minute moving average.
It bounced off at 11:42 off the 9 exponential moving average.
Yeah, I mean I know my little 9, my girlfriend, oftentimes these downward stocks will come up to that 9-15-minute moving average, and that will be the first resistance
You buying
leg
some
down.
puts right now? Let's do it.
It's just a virtual account. I thought I'd throw it in for fun.
Let's do it.
Put action, done and done. So, that's a good little intraday bearish retracement. That's one thing for the newbies out there, and obviously experienced traders probably know this. Every chart pattern works intraday just as well as it does on the daily chart, just as well as it does on the weekly chart. So you catch a good bear retracement or a good bull retracement intraday, actionable patterns. As a day trader, back in my day trading days, I used to love, catching that retracement. If you miss the pop, that's where my miss the pop, wait for the drop retracement adage came from, was from day trading. If you miss the pop, wait for the drop. Not too shabby.
I guess this one's backwards. If you miss the drop, wait for the pop.
If you miss the drop, be patient and wait for it to retrace. That doesn't rhyme, but it's effective. Okay, next on the list was Big by Frank. Frank's giving us a big breakdown opportunity here, pun intended. Oh. Big Lots is going down. Nice inverted cup and handle. That's a pretty setup.
That is a beautiful setup, and you're still early in it. You had breakdown yesterday, confirmation looks like today. Listen, shorting retail is usually a pretty good idea.
This is one of the reasons I absolutely love following Frank, because his watch list for breakdowns are probably like 50 strong. Frank's in the chat, you can tell us, but he'll watch some of these stocks base along that breakout point for months at a time, and then when they do, he puts it up there. It's like, hey, look at this! It finally broke after 3 months of trying to break it. Fantastic.
And what Cody's talking about there, and what Frank illustrates, is like, just good disciplined trading 101. So often we look to make money today, and that's all we care about. What am I doing today? What am I doing today? Frank is that, hunter in the woods saying, hey, I'm going to sit here on this stock. I'm not going to spend, check on it, spend a few seconds. Doesn't have to spend much time on it. But when he sees a good opportunity, just because it's not triggering today doesn't mean he gives up on it. He looks, he follows, he checks in on it. And once again, checking in on Big Lots. It takes Frank, 10 seconds a day? That's how much he has to invest to have a nice opportunity, takes advantage of it yesterday, nice breakdown. Be more like Frank.
Be like Frank.
It is Frank Friday here on the halftime.
Frank Friday.
Let's be Frank here. There you go. That works.
Let's be Frank.
See, Noah always makes me laugh. I don't know how he does that, because I don't even think that joke's funny.
But it's not funny. That's why it's funny.
But it made me laugh.
It's the dry humor like The Office. It's so broken. It's such a bad joke that it makes it a good joke.
It's like I'm the king of dad jokes.
So
I've got them all.
All right, got time for a couple more.
Next on, I think we got Workday, WDAY.
Work.
Looking pretty bullish to me.
Yeah, that's nice breakout yesterday.
Little overextended on the RSI. It touched that 70 rail. All right, nice little look. Next, we got Adobe. Give me a read on that, Mark.
Well, here, Adobe is, it's like the market. Like, it's going up, but you're so used to breakouts just being these things that fly and making immediate money. I bet you this looks a lot prettier on the weekly chart. It's one of those situations where the breakout breaks, but it doesn't fly. But it's still a breakout, still really nice momentum, just chugging along. Kind of looks like the market to me.
Kind of a slow and steady wins the race kind of thing scenario there. Not too shabby. And I think that's all the symbols we've had for the rapid fire. I don't know if I missed
everything
any.
We have. Yeah.
Well,
Flipped
definitely
again.
have some nice
Hey.
candidates for us to debate and evaluate this afternoon in our Friday meetings for the scouting reports.
No doubt.
Well, Mark, take us out.
Nice. Okay, if you're not a member, we're going to have a new set of scouting reports this weekend. Option report, stock report, commodity report, picks on all of them. If you're not a member of Tackle Trading, send me an email, team@Tackle Trading. I'll get you hooked up with a free trial so you can check out the content of those reports. We meet for 3 hours, sometimes longer, on Friday afternoons, debating, analyzing, going over every stock that makes our report has to have a unanimous vote. 100% of the coaches at Tackle Trading say, yes, that is a high probability trading candidate. So check out the reports this weekend for pro members. If you're not a pro member, send me an email, team@Tackle Trading. I'll get you hooked up with a trial so you can check out the reports this weekend and next weekend and all of the other wonderful pro content. Have a wonderful, safe, fabulous, fun, Frank weekend this weekend. Be more like Frank. Frank exercises great. If you exercise the patience of Frank, you'll be a better trader.
Put that in the chat. Everyone type in, be like Frank.
Be like
Be
Frank.
like Frank. This is Frank. Be like Frank.
Frank,
All right,
type.
guys, we are
Be like
out.
Frank. Have a good weekend, everyone.
Have a good weekend, everybody.